So I'm going to introduce you to Matthew Moody, who's the Head of Trade and Lending ASEAN and Head of Trade Financing Structuring APAC Deutsche Bank, one of the longest titles. I think you might win the word bingo for titles at the conference, but Matthew, over to you.
Fantastic. Thanks for the introduction. And thank you all for joining our panel session this morning. So before we get into it, what I might do is just hand around the panel to introduce themselves. First question to the panel is really, who are you and what does your company do? So that might give us some insight about what insights you'll have to us today. So handing over on my right.
Yeah, thanks, Matthew. Hi, I'm Bharat Gupta. I run the trade and structured finance business for Olam Group based out of Singapore. Olam is one of the leading agri-commodity companies listed in the Singapore Stock Exchange. Thanks.
Hi, I'm Anushka. I run the trade and working capital business for the ASEAN region for Citi. Trade and working capital includes the entire suite of products, including core trade and structured trade, including receivables, payable, and inventory finance, and the export agency finance solution. Thanks.
I think I've had my introduction, so I'll hand over to Manish.
Hi, everyone. My name is Munish Kaushal. I'm Global Vice President Finance for Haleon Consumer Healthcare. So Haleon is actually a breakaway from GSK Consumer, and with the flagship brands like Sensodyne, Panadol, etc. So I'm looking after the categories, marketing, and R&D finance for Haleon.
Hi, my name is Hamsika Gopalan, and I'm part of a commodity trading company called Rescom. We are based out of Switzerland and Dubai. We are into non-agri commodities such as metals and industrial minerals. Thank you.
Hi, I'm Pratipan Karunagaran, and I represent RG's agribusiness group. I'm the executive director. RG's is a large resources company with businesses in fiber, cellulose, agri, and clean energy. Thank you.
Okay, fantastic. As you can see, we have a selection of panelists across industry, soft commodities, hard commodities, healthcare, as well as some bankers to tackle a very pertinent and relevant topic today. All of which I think we've had a bit of an introduction from Mike a bit earlier, for those who missed that, and covered a lot of the areas that we'll be covering today. So supply chains and disruptions to them is not just a topic for specialised events such as GTR, but we've seen this is a topic that the general population, the political class have really come to the forefront recently due to COVID-19 and then the recent Ukraine situation. The impact of supply chain disruption has been felt across many aspects of people's lives. Whether it be access to consumer goods or during COVID-19, access to healthcare and necessities and keeping them flowing during this period of time. COVID-19 tested the ingenuity of many of the panelists up here today and their organisations. Ingenuity, resilience and flexibility, key terms that were bandied around over the last couple of years when we talk about supply chains. And the resilience has been a key test of companies of the attention of all stakeholders, investors, governments and the whole community in general. And then just as we thought COVID-19 was over and we were getting back to some normality, we get hit with the Ukraine situation. COVID-19 was much more broad-based across the economy. Now Ukraine seems to focus a lot more on energy, gas, and then the soft and hard commodities as well. So never before has supply chain and their impact on economies been more relevant to people's lives. And we heard a lot of that about in Mike's speech as well, and the bottlenecks around supply chain and the impact that may have on inflation. So I'm very excited to chair this panel today on such a pertinent topic. So before the first topic I'd like to address, because it was such a key topic during the COVID-19 situation, is the healthcare sector. And one industry that's been at the centre of that is healthcare. So not only has it been a topic amongst the general population, but also politicians, governments, and industry in general. Keeping medical supplies flowing, keeping development of vaccines and consumer goods flowing during that period of time. So I'll hand over to Manish just to talk about some of the challenges, some of the insights that the industry has developed, and how resilience of supply chain has been an increasing topic amongst boards and stakeholders within your industry.
Yeah, thanks. See, first of all, great to see so many people without masks. So it also kind of reinforced that, we are kind of recovering from COVID, and coming out of this pandemic. But this pandemic has taught us quite a number of things. And one thing is that everything is quite fragile, be it with supply chain or anything else. So in supply chain, basically, there are three pillars, which are the most important. One is how do you buy, how do you make, and how do you serve? And all three were under tremendous challenge. So in terms of buying, you had challenges in terms of getting the right APIs, you had challenges in terms of getting the raw materials, and in terms of make, especially for multinational companies like us or other large pharma or consumer healthcare companies where supply chain is quite centralized and one big site kind of serving more than 100 countries. So how do you kind of make sure that you make and survive while some of the production people are also impacted with COVID? So that was the second big challenge. And the third one is, of course, serve. How do you serve? And therefore, the biggest challenge which we faced, or most of the pharma and consumer healthcare companies faced, was that how do you serve in today's world when there were like lockdowns, there were all sort of disruptions to the travel, and most of the companies who have come through this are the ones who had actually a resolve in terms of customer service, who had the plans in terms of making sure that the supply chain continuation is the top priority. And these were the times wherein the customer service actually take a front seat versus some of the other parameters like cost, etc. Especially some of the measures which helped us survive in this whole thing was, one is the risk management. And I have seen across, discussing with various peers, the companies who had a good risk management and the risk recovery strategies have fared quite well. And the second thing was around agility, that how do you simplify the decision making? How do you kind of create a mindset of, can-do attitude? And that also helped in terms of making sure that we survived through this pandemic. And the third one, which was around innovation, like you talked about, like vaccination, or within the current portfolio, you had to innovate quite significantly to make sure that you are able to serve. So it could be innovation in your processes, innovation in your decision making, and how do you kind of conduct yourself. And the last but not the least, which has really amplified during pandemic, is digitalization, and therefore how quickly you can take decision to digitalize some of the stuff which you would have been doing otherwise. And all these measures put together has made sure that the consumer healthcare and the overall industry has survived through this pandemic.
So, it's just a question then. How has the conversation around supply chains in your industry changed? Has it moved from lots of conversations about efficiency and improving costs, or is it more about resilience these days and making it standing up to shock events?
During the pandemic, I think it had really about the customer service and making sure the business continues. Of course, some of the good things, which we have learned in the pandemic, which was around agility, which is around, we had never imagined some of the stuff, which can be managed remotely. So how can we continue that and bring those efficiencies even in the post-COVID world? And also from a cost perspective, of course, over a long term, the cost management and the cost strategies are taking over in terms of how the things are now moving with the Ukraine situation. Everybody is impacted not only with the commodities inflation, but overall inflation. If you see in the US, UK, various other countries, including Asia, it's really significant. And therefore, all the companies are looking at cost management strategies. How do we make sure that we re-engineer our processes, re-engineer our thinking, and survive through this turmoil.
Okay, fantastic. Thank you. It's not very often that we get to see so many, clients on the panel at the same time and in one spot answer questions for us. So just moving then to maybe the agri and the sort of hard commodity side. Let's move into the Ukraine situation for a minute. So we've got the Ukraine war, we've got sanctions on Russia, we've got the impact therefore on hard commodities, soft commodities. We've got in my company's home market, gas constraints and the impact that's going to have on the industry as well. put on top of that also we have a dry summer in Europe where barge loads have to be reduced. We've got shipments from China going through Russia having to be diverted now through new routes closer towards the south. So handing over to maybe Bharat on the soft agri side, where Ukraine was one of the world's largest exporters of soft commodities. What impact have you seen on your business? What impact have you seen on changing your trade routes? Over to yourself.
So taking cue from what Mike said in the morning, expect the unexpected. And, he also mentioned about, things relook over a period of last few 100 years, wherein we are actually seeing something which we have not seen for last 100 years. So if you look at weather gods, they have not been very supportive. There's been drought in Europe, in South America. There have been floods in other parts of the world. There has been disruption because of the war. The rivers are drying up. So the river route which was used in Europe, that is also not very supportive. So there's been a huge disruption in agri-commodity movements from different parts of the world and also from where we've been trading in. So one of the statistics from ag organizations is this has been the biggest disruption in last 108 years after the First World War, which is from 1914. And we actually see huge challenges for food and agri-commodities moving to places where they are actually needed. We've seen specific problems coming in from Ukraine. There were contracts which were done, and because of the war, that needed to be substituted. And you then go to India, you go to US, Australia to buy wheat. And then, of course, you had specific issues where countries started to restrict and export bans started. So, constantly you had to relook at how are you going to source, from where are you going to source. The other big problem is, the fertilizer problem from Ukraine and Russia. So we see it's going to be a long drawn process, not only for this year, but also for next year, because the fertilizer cost has gone up, the fuel cost has gone up. Very clearly, you will see a reduction in yield per hectare from some of the economies like South America, where they may not use so much fertilizer to increase the yield, which usually would happen. So this is going to be a long drawn process, going into 2023. And of course, all of this will be a function of how the war kind of trajectory happens and what the leaders of the world decide among, discussing with each other on what's food security aspects they need to be worried about and not just, the war-related problems.
Okay, so a few topics we'll pick up in a minute as well around friendshoring, regionalisation, nationalisation there as well that you sort of touched on. But are you seeing, I suppose, a shift in investment now as well? So are there plans being made? Obviously there was a supply side shock there as well in terms of where we were sourcing. So are there being investments made to shore that up in the future as well?
So there are continuous, investment plans which keep on happening, but obviously with such sensitive geopolitical situations, these plans, need to be focused more on, like we're going to be discussing more on friendshoring and reshoring kind of aspects. So you would have investments done where, your markets are closer to markets, because you no longer can be dependent on one country or one region for your supply chain. And obviously, when we are doing our investments, we certainly keep that in mind that, we do it close to where our markets are. So we have pretty large investments in Africa where we have wheat milling. And, this is where we had the biggest impact because of the war, because we had to move in wheat from Ukraine. We buy a lot from Ukraine, Russia. And obviously, as bankers, our fellow bankers, we always look upon you, how do I make payment for Russia wheat, which is not very easy all the time. So, you always need to reroute your procurement from other markets and bring it to markets where which are closer to your customers. So we do have investments, but intention is very clear that it needs to be closer to where our markets are.
Okay. Pradeep, over to yourself then. Same question, slightly different industry as well.
Yeah, slightly different industry. So a little bit of perspective in regards to the industry. So the vegetable oil industry, which is a very essential food item, is about 250 million tons globally, and palm oil accounts for about 80 million, largely coming out of Indonesia and then Malaysia as well. And as RGE Agribusiness, we are present as Asian Agri on the upstream plantation and then on the mid and the downstream as Apical. The last 3 years, to say the least, has been extremely challenging and interesting. We had and affected the global agri supply chain immensely, yeah. And so we had the COVID-19, then extreme weather conditions in both northern and southern hemispheres, inflationary pressures, and therefore government taking extreme regulatory decisions. And to add to all this, we then had the Russia-Ukraine war. Right? And what all of this has taught us over the last 2 to 3 years is that we need to have a good, solid risk management framework that could withstand all of these very high price volatility, number one. And number two, and most importantly, a robust, adaptable, flexible supply chain that could also stand the extreme changes that happen. Two simple examples. One, Indonesia has close to about 3 million smallholder farmers, and the entire livelihood depends on palm industry. Yeah, it's a huge number. And then we had the COVID situation wherein there was MCO, the movement control orders, right? Where the transportation was affected and you just could not bring the fruits from one point to another. And as all of you would know, palm trees produce throughout the year. So if you don't harvest them on time and if you don't take them and process them on time, it's gone, it's lost. And the livelihood is lost, right? And for us on the upstream plantation, we deal with close to about 100,000 smallholder farmers. We had to look after them and we have to make sure their livelihood is protected. So this is where the integrated business model comes into play, the robust distribution and supply chain comes into play. Another example being Ukraine. Ukraine is the largest producer of sun oil. They account for almost, I would say, 50 to 60% of the sun oil globally. And as all of you know, sun oil is the most used after cooking oil everywhere, in every single homes today. And then the war happened, and you could not ship directly. And we have consumer brands in the major consuming countries like India, Southeast Asia, where we have to keep the brands on the shelf. And we also had, obviously, our customers who depended on the supplies being brought in. We had to truck sun oil from Ukraine into Romanian borders, then put it into a barge, down Danube River, into Black Sea, into a small vessel, from there into Turkey, and then transshipment from Turkey to there, right? And this cost us roughly about $400 compared to usual times $80 per ton, right? And this was not possible if we did not have resources on the ground, fleet of ships that could be quickly deployed, and a very adaptable supply chain. So yes, all of this affect, and it's costly. And but you have a responsibility as large resources companies.
Fantastic. Just moving on now to the topic, and we touched on it already, around supply chain shift friendshoring, regionalisation, geopolitical topic here as well. We've seen things such as the Australia-US closer cooperation around topics around rare earths and copper and all those, regionalisation. Bharat, you talked about bringing your production closer to the market as well. Maybe what I'll do is I'll hand over to Hamsika just to talk about more the harder commodity side, the oil and gas and energy side as well, and what she's seen around those topics.
Thanks, Matthew. I think I couldn't agree more with Bharat and Pradeepan. In fact, the hardships that we face in the hard commodity space is pretty similar to what they face in the agri sector as well. I think post-pandemic and the current war, the situation that we are facing right now is that a lot of smelters, aluminum smelters across Europe, which is not just aluminum, but zinc and aluminum smelters have shut down in Europe. There has been, every country has sort of focused a lot on resource nationalism. They've started hoarding many important commodities such as food, oil, metals. That has in fact caused a bit of disruption on the supply chain as well. Not just that, I think apart from Ukraine and Russia, which of course is the most hot favorite, people have to also remember the tensions between China and Australia, which also has in fact continues to have an impact on the commodity space, particularly in coal. So all of these have added to the tensions for hard commodities, and apart from, in fact, adding to what Bharat had mentioned of going to newer sectors for investments into commodities, a classic point that I think people have to also remember is that all the easy resources are now sort of taken away, which means we are now left with difficult terrains to sort of develop. We are now looking at Guinea, we are looking at Sierra Leone, and that's where I think banks such as Citi and Deutsche would have to also support commodity traders in looking up for newer resources in the current space. So I think it's a long fight, but I think there should be light at the end of the tunnel.
On the energy side, how much of this is somewhat self-inflicted by the underinvestment in oil and gas over the last decade? How much is that going to be, is there signs that that's going to be solved, or is this, is the supply side issues that we've had, going to be continuing for the next decade or so?
On the energy side, what also needs to be borne in mind is that coal and fossil fuels, it will take a bit of time for us to sort of have alternative fuels in the market be as cheap as coal is at this point in time. So while we do understand ESG concerns and all of that is very important, but I think it has to be also phased out in a certain matter, because as developing nations still depend on coal as one of their major sources of energy, and that again, we are seeing what's happening in Europe and the West at this point in time. So access to cheaper sources of energy will be a major factor to be played in the energy space.
Fantastic. So, Bharat, just over to yourself then on this topic of regionalisation and onshoring as well. So, have you seen changes in terms of how governments are interacting, what they're talking to you about, and support to regionalise your supply chain?
So, in last 3 decades, I think there have been 17 armed conflicts which have happened globally. And immediately after the Russia-Ukraine war, we've actually seen about 24 countries putting in tariff and non-tariff barriers. Effectively, what it means is that everybody is worried about how are they going to, talking about agri-commodities, how are they going to get their food or agri products into their economy. When we had India putting in restrictions on wheat exports, we had Indonesia coming up saying that no oil exports. We had the Black Sea restrictions on ships moving out of Ukraine. Fortunately, the Senegal president, who is also, representation for Africa, he visited Putin, and there was a UN brokered, solutions wherein they not only agreed for Ukraine ships to move out, but they have also agreed to have Russian fertilizer and wheat moving out of the Black Sea. So we've seen a lot of movement happening on these commodities. But important thing here is you cannot have one country depending on one country to source, or even one specific region. And that is exactly what is happening by friendshoring or regionalization, wherein, as in the morning, Mike was saying, that most of the supply chain origination is coming from the Asia part. And you don't have a lot of origination coming in from Europe or from US. But in the agri, we have a lot of origination coming in from South America and from US, from Australia, for specific commodities. We have oil coming in from Southeast Asia side. But it is extremely important that you have the UN and you have these countries coming together and deciding on how do we ensure the food security for people. Because one disruption in Black Sea created a huge amount of shortages, and we've actually seen people getting into a lot of trouble in Central Africa part where there was no wheat available, and since we've been selling flour, and we have our own flour mill for pasta and for bread, we've actually also had trouble getting the commodities into the country to make the flour and sell it out. Fortunately, as Olam, we've got our origination, pretty nimble, and we could substitute, and we could manage to get our factory running and work with the governments there. There were contracts for Egypt to get wheat from, Black Sea wheat, as they say, from Eastern Europe. And with the Ukraine war, suddenly it stopped. So as Olam, we worked with the government to try and source wheat from other markets and get it across to them. So it is, increasingly getting more and more important for governments to stand up, take a look, and try and get fixed to this very big problem, especially on the agri side, wherein you need to get the commodities, agri commodities into your country. Unlike manufacturing companies where you could actually invest for your processing work close to your home market, with your friends close to your countries, or in your own economy. Agri is, of course, dependent on where the production happened. So it is not going to be very easy to have agri friendshoring done, because at the end of the day, it is all going to be about where the crops are coming in and how you're moving it. But it is going to be more important of how we ensure that there is no disruption which happens. A classic example was because of COVID, we had lockdown in China. We had a lot of problems in the shipping line, container lines, delays happening there, which effectively meant that the container shipments which we were doing for smaller commodities, which are not bulk in nature, they just came to a standstill. We had customers, who would want to buy only on CIF basis, wherein they would want to pass the container rate risk to the commodity players. And, you would not find containers to ship the goods. So there has been a lot of regionalization happening. Even for sourcing containers, it got stuck in some specific ports in China. We could not get those, and which disrupted the rest of the world shipments.
Okay. Changing the subject a little bit, just going onto the topic of ESG for a minute, and maybe passing over to Anushka and maybe Hamsika on this topic as well. We've seen record high coal prices, we've seen record high LNG prices, volumes are going through the roof as well. One could argue on the supply side, the underinvestment of the last decade has contributed to that. Obviously, we've got supply constraints because of the war as well. But we've certainly seen coal imports at record highs, European governments relaxing their ESG standards. So is this a period of time where did the governments get it wrong? Did the bank's ESG standards get it wrong? Are we seeing sort of relaxation in ESG standards, and will we go back to the high ESG criteria that we had in the past?
Yeah, I think even yesterday, if you recall, Matthew, we were in another panel discussion, and there was a lot of talk of, I think in trade, what is and what cannot be defined as sustainable in trade and trade finance. And I think even last year, ICC came out in about, I think, 2021 November, with a publication where there is an effort now made to articulate what could be considered sustainable in trade and trade finance. I think the main thing here in terms of the discussions we're all having, with the challenges and the disruptions. I think what's becoming clear is it's also acted as a catalyst for all the corporates here on the panel to think about doing things differently. And I think the focus is really on creating much more resilient supply chains and on operational risk enhancement. And I think it's stemming from the need to create much stronger operating models. And the discussion, Bharat, you were talking about in terms of the supply chain diversification or regionalization, I think is also coming from the fact that there needs to be much better risk management principles and focus on creating resilient supply chains. And the discussion then goes into, given that Asia is really the production house of the world, there is a strong impetus for us to introduce sustainable supply chain, going to scope 1, 2, 3 emissions. And Citi, again, like other trade banks, has been working with a lot of our corporate clients in launching the sustainable supply chain programs. I think, and the key there would be really to work with our clients to have independently assessed sustainability scores and improvement enhancement criteria which help them meet their sustainability priorities so that we can really help to deliver on the corporate agenda of sustainable. I don't think it's about relaxation of ESG standards, as there is a need to create consistent definition of ESG standards in trade, and towards that maybe take the leap forward in Asia with sustainable supply chain finance, and then gradually move into the use of proceeds, trade finance and working capital sustainability linked loans, which give further impetus to our corporates to meet their sustainability priorities.
Hamsika, maybe I'll ask the question slightly differently. Is coal back? Is oil and gas back? Is this a resurgence of that part, or are we just waking up at the, or is this just a blip and we'll be back to?
Well, oil and gas is never gone for it not to be back. I think it will be back eventually. Things are improving at this point in time now with the first wheat trade of Ukraine and all of that coming up now. But coal, I think I sort of agree with Anushka that eventually you have to be more environment focused and sustainable and things like that. But my personal opinion is any change on the ESG sector or on coal production or coal imports for that matter of fact has to be phased. It cannot be done overnight, and that is causing a lot of disruption, I would say, in the current energy space as well. And many countries, for that matter of fact, Matthew, continue to depend on coal for their primary energy requirements. So while we all understand the significance or the importance of that, I think a good 20-30 year horizon or time span to bring this down and give enough time to make alternative fuel sources more cheap is a good way to look at it.
Okay. Turning in now probably over to the banking side. So we'll turn to Anushka, myself, and maybe we'll get some feedback from the other panelists as well. So we've heard a lot from our industry teams about what disruptions they're seeing as well. Anushka, do you want to give us a summary maybe on what demands upon the bankers have changed, topics around digitalization, we can talk about deep tiering, financing, all those sort of areas as well. So
definitely. I think I covered sustainability finance, so I think I won't go into that. But definitely, I think the pandemic did see a wide-scale adoption of digitization by all our corporate clients, and I think Manish started with that, right? I think digitization becoming a viable factor in international trade has been established. I think what's really key now is how do you create the scale and the network effect. And in my personal view, I think it will require a hybrid model, because a lot of banks have been working in isolation in terms of refining and enhancing their own proprietary platforms, which I think will continuously happen. Trade being one of the key priorities for Citi, we continuously enhance these proprietary platforms. But I think to create a real community effect or a network effect, we all have to start becoming industry participants of a lot more industry consortiums, be it Contour, be it Comgo, be it Trade Lens, wherein a lot more industry participants, be it banks, corporates, and other counterparts of the trade ecosystem need to come to really help make digital mainstream. And I think that's really the need of our corporates as well, where they don't want to work with 15 different proprietary platforms across a consortium of banks, but have a single user interface or a consortium where they can interact interoperably between the different platforms of their banks. I think the other thing you touched upon is the deep tier financing.
Well, I think just on the, because digital, we talked about this yesterday, so on the digitalisation side, I think we saw a lot of, bank to client sort of digitalisation one-to-one. What we haven't seen is that sort of industry-wide changes as well. And so often in trade finance, we talk about more the doc trade side of things, digitalising. The adoption of that side has been quite low so far. So that seems like a broader industry sort of change required. Is that right?
Absolutely. And I think that goes to the point of being interoperable between the proprietary platform and the industry platforms. I think some of the consortiums we've seen, right, whether it's the Contour or Comgo, do bring the merits of complete digitization across all the participants of the trade ecosystem. But what's really required is for the key trade finance banks to really adopt some of these open consortiums so that we can drive that network effect to really make it mainstream.
We've been very good between bank to client, but we haven't done an industry-wide.
Across the ecosystem.
And there's a number of different participants in that ecosystem that have to join, isn't
Absolutely.
it? So everywhere from shippers through to clients through to all the banks as well. Okay.
Exactly.
Sorry, I interrupted you.
No, I think on the other part, and I think it kind of dovetails into all the points the panelists have raised around the disruptions, right? And I think what's going to be important in the next few quarters, which are going to be quite telling in my view in terms of its impact on the trade activity next year, is going to be how do you continue to make your supply chain resilient? How do you continue to drive sales without taking enormous amount of counterparty risk? And how do you try and come up working with your trade finance banks with innovative solutions? And Bharat, you and I were talking about it before the panel in terms of being creative and balance sheet efficient in the structures that can help to create that liquidity while meeting the drivers of adding resiliency in the supply chain and enhancing sales without taking undue counterparty risk. And I think this is where trade banks like yourselves and us, we need to kind of step up the discussion around innovative structured trade conversations around receivable finance, payable finance, inventory finance, with the objective of delivering working capital efficiencies, but also keeping in mind that you need to contain some of these risks as we get into the next few quarters.
Okay. What I might do in the final 5 minutes or so is just hand around the panel just to either, we've got a lot of bankers here today, we've talked about your problems, maybe how the banks can actually support you going forward, what you would like to see from the banking community going forward, or maybe just some other wrap-up comments as well. So Prathipan, why don't we start from your side and go around?
Sure. I think further to what Anushka touched on the sustainable linked loans. Yeah, and I think large resource-based companies such as ours are committed to obviously ESG and sustainability linked goals and mandates. I think where it's important for us to work very closely with financial institutions such as yours as well to make sure that we convert them. Yeah, and make sure that there are sustainability-linked financing options that are available. Like, for example, the group, both our fiber and the agribusiness was able to obtain 1.7 billion in SLL last year. And it was, I think, probably the second largest in Singapore. That had very important KPI commitments in regards to ESG and sustainability. And hence, it was, I think it's beneficial for both the company as well as the financial organization. Another important aspect, we work closely with almost 750 to 800,000 smallholder farmers in Indonesia. Yeah, and it'll be helpful. And that's the supply chain dealing with. And it will be helpful for financial institution to access them, whether it's microfinancing or also even to sort of guide them on the sustainability journey. So I think it's important for us to work together and to make sure, especially with the larger resource-based companies, to see how we can sort of flow through and make it successful and also reliable for both the financial institutions and the companies.
Hemsika, same question to yourself.
So I think to sum up what possibly is the need of the hour, and as Anushka has rightly pointed out, is it's important for corporates and banks now to work together, and particularly for commodity trading companies such as us. I think, and all of us, is to work with banks such as yourselves, and where we see that the bank supports us in terms of decision making when it comes to new geographies or new suppliers and new customers. Now that most traders are in fact looking at newer geographies for sourcing or newer geographies for selling, it's also important to tap on to the bank's resources to understand and assess their risks and then plan their trades accordingly. And that I think is very important, especially for banks and corporates. And I hope that happens in the near term. Thank you.
Manish,
Yeah, I just want to touch upon 2 points. So first one is on ESG. So that is absolutely a commitment. And the way I see ESG is that any organization need to have a long-term kind of a plan and outlook to how you implement ESG. And I see ESG actually as a competitive advantage. And the organizations who are going to be at the forefront of applying some of those ESG goals are going to gain in long term. For example, let's say for us, we have committed for our flagship Sensodyne brand, which is about 1.7 billion pounds, to move to recyclable tubes. And that is already underway, and in some of the countries that has already been implemented. And from a broader supply chain perspective, I would say that 3 things are continuing to be very, very important for supply chain. It's going to be cost, customer, and compliance, and how organization kind of build a risk management framework around it and have a long-term vision around it, and imbibe the learnings, which we have taken from this latest pandemic. That will help us in terms of sail through from a long-term perspective.
maybe a slightly different question. Sorry to throw another one at you. Are you seeing supply chain and topics around supply chain resilience getting an increased focus since COVID-19 in your board and discussions at senior management level? Is it taken a whole new level?
Absolutely, yes.
Okay.
Yeah.
Okay, fantastic. Bharat, maybe I'll hand over to you as well. What are you looking for your bankers to support you growth-wise as all the issues that we just went through?
Fortunately, I think as Olam, we have an extremely strong engagement with the banks. And we have seen, when, of course, the next panel is going to be discussing on the frauds, which has been happening. But we've seen when, such difficult times come in the financial markets, you see flight to safety. And, obviously, you had few banks who kind of phased out of commodity financing, but they still, have increased lines for roll-ups. So that way, we did not have any working capital or financial related issues. What we've been working very closely with the bankers is trying to do some deep financing, as Pratipan mentioned. We have our customers who are small farmers again. In some of the very difficult economies from where we source, for example, in Africa, where we've been working with financial institutions to try and work with DFIs to try and see if we can credit enhance and do the big question always is, everybody works on post-shipment finance, but not many banks work on pre-shipment finance. So, always the request is, how can we as a large corporate work with our bankers to credit enhance the risk and work on pre-shipment finance for our suppliers, which would actually, from an overall basis, reduce the cost of borrowing for them, which obviously reduces the sale price to us. So it's more of continuous engagement, which we do with our bankers and try and find innovative solutions so that we can create financing for our suppliers who are in the SME, MME space or the small farmers for that matter. And, work more closely to, ensure that a liquidity is available to most of them.
Okay, thanks, Bharat. Nushka, anything you've heard here on the panel today that's different to maybe what we've discussed over the last couple of days, or?
No, I think they're quite consistent, and I think Bharat actually summarized it quite well. And, in the respect of deep tier financing, and again, Citi being one of the trade leading banks, we have announced a partnership with a fintech called STEN, which is actually a global platform where they go and partner with us and provide deep tier financing and PO financing. And I think the only point which I wanted to make, and it's interesting, the session on the other side, Stream B, is the ADB deep tier financing, that as imperative it is for the private enterprises to bring capital to go deep tier financing, I think it will also require a stronger partnership with the public enterprises. So working with some of the multilaterals, be it ADB or IFC, to really go deep grassroots level to offer the deep tier financing will be important to enhance the credit appetite that the private enterprises need as we penetrate down the tiers the multi-tiers of the supply chain of our corporate
with
clients.
the multilaterals at the end of
Yes.
the day. Look, I think we've had a fantastic discussion. I want to thank all the panelists for their time and insights today. I'm not sure if we've got 5 minutes for questions. Is that right?
Yes, we do. I've got a couple of questions that have come through on the app. In fact, a couple of the early questions were on the ESG topic that you've already covered so very well. The first one that's come through here is about corporate risk policies. How well have they worked in terms of the changing of supply chains, sales risks and currency shocks? Have people, the corporates, had to accept more risk in their business?
Okay, maybe I'll see if any of our corporate colleagues want to take that one on. Bharat, yours.
So if I understood correctly, you mentioned how are the corporates managing the currency risk?
Along with the other risks, are you taking on, the question is, are you taking on more risk by virtue of these changes in the way the world is?
We don't like to take risks. Okay. So I think that's the bottom line. That's how you should start. You already take risk when you're buying and selling commodities. Sometimes you have to go long, sometimes you get into contracts, you get into futures. You would always work very closely with your banks to mitigate the commodity risk, to mitigate the FX risk. In many economies, you can't even have a forward cover done. So you would then work with banks to create a surrogate basket of currencies to try and see how you can mitigate those risks. So we deal in cash commodities, we deal in exchange traded commodities. So if it is exchange traded, you can always hedge it. But if it is cash commodity, you then need to be very close to market, understand what's happening there, and find a surrogate so that you can mitigate those risks. Not have a very large positions because that could impact your P&L at the end of the year. But most important thing is work close to bankers, try and mitigate the risk, hedge whatever you can.
The next question that's come through on here is how can we digitize trade to emerging markets or with emerging markets when trade platforms are closed? It goes on to say, is it like an agent in, for example, Sierra Leone will be part and paying to be a member of one of those trade platforms? So I think that's an emerging, are you having to deal with more risk depending on the newer markets that you may have to be acting in?
Yeah.
Both banks and corporates.
Okay, I'll have a go first of all and see if Anushka wants to add to it. I think, digitization, and this feels like that dock trade topic that we were talking about a little bit before. I think the dock trade topic comes down to a topic of adoption, first of all. And adoption means everything from regulations in the market. It means everything from regulators, somewhat having catalysts for the adoption across the many, many different stakeholders. So I'm not sure that we've actually got the developed markets onto the platform of digitization yet, and therefore the more emerging markets, whether it be Sierra Leone, which sounds very emerging to me, is some way off. So the catalyst yet hasn't been found for digitization of the dock trade side. We've got a 100-year-old system which is paper-based, which is slow to move and slow to change. And it comes down to, I think, we were talking before, there's been a lot of digitization bank to customer, whether it be guarantees over a digitized system, which is bank to customer. Here we're talking about the whole industry, so there needs to be that catalyst to make that change. And that comes down to regulations, it comes down to adoption, it comes down to something to entice all those stakeholders to get onto the platform. Anushka, do you have
Yeah, I think I would just add that it also in the emerging market context requires a much stronger regulatory impetus. And we've seen that work in the context of certain markets. Like if you see India, for example, they have significantly digitized and put all their import-export data onto a digital platform. Even their digital trade documents for the domestic trade transactions are now digital. So that then allows the ease of continuity or having a business continuity plan even during an extended lockdown or when the systems are not moving efficiently. Similarly, in China, if you see over the last 2 years, whether it is the RMB trade finance platform and other digitization initiatives, a lot of the import-export data is now moving onto digital platforms. So I think where we have seen success in the context of markets like Singapore and other developed markets, there has been a strong regulator impetus. And I think that's really what we need, much more wide scale in some of the emerging markets to really allow for a full-scale adoption of digitization.
The technology exists, it's actually more the regulator and the adoption side.
I think that brings us to the end of the questions on the app. We've got time. If there's anybody in the room who's got one particular burning question they want to ask, I assume that the folks on the panel will be with us through lunch break as well. So if there are some questions that you have for them, you can approach them individually, and I'm sure they'd be very happy to help. Well, if we don't have anything in the room, I'd like to thank Matthew and his panel. Thank you all very much. Please show your appreciation. Thank you.
Thank you.